Time for some common sense on SpaceX. Joining us for that is Craig Bolanos, a co-founder of VestGen, as well as a wealth advisor. Glad you're here, Craig. We watched SpaceX skyrocket as an IPO and then fall from that opening day price. What goes through your mind when you see a hot stock like this one?
Well, I think it's rejuvenating to see these incredibly innovative American companies come out of the private market spots because they get too big and finally go public, giving so many people access. That being said, of course, Angela, I haven't been around the game for a bit. I certainly feel like it's a throwback to the 1990s. Now, there's a lot of lessons that get learned. IPOs typically result in what I call peak enthusiasm. And that's why if you're going to be buying a stock that goes public in the public marketplace, I think you really want good discipline and good governance to build your position over time, because once the lockup periods expire on these IPOs, trading can become a little bit more loose and a little bit more sloppy.
What else can you tell us about the original investors in SpaceX who will have their first opportunity to sell that stock in late July, early August?
Yeah, I think what we need to look at is we just need to look at the stats. And there are so many stats to show that nearly 50% or more of companies actually trade below their public offering price inside of 1 year. And people are so shocked to hear those numbers, but that occurs because when these companies go public, typically a small amount is floated. And then after a 3-month or typically a 6-month period of time, something called the lockup expires, where more of the OG, the original shareholders, can sell more of their shares into the free market. And again, all thing investing is supply and demand. So if you naturally limit the supply, there's going to be peak demand, peak pricing. Once you have the lockups expire and you increase supply with constant demand, that's where you sometimes see some declining prices.
One great example of what can happen with an IPO is Facebook. That stock opened in May of 2012 at $38, and then by September it was all the way down at the 17 level. How important is it to be aware of these hot IPOs and what can happen next?
I think it's just that. You want to look for some levels of exhaustion. I mean, certainly SpaceX, along with part of the NASDAQ and the other technology companies, are coming under some pressure. We've seen that just recently. That being said, I think Facebook Meta is probably a great example of a stock that had its public debut, rallied hard in price, and then traded below its public offering. But if you stayed away from it, you missed it. SpaceX might be able to grow into its earnings. SpaceX might be the dominant player that so many people hope it's going to be. And that's why I encourage investors to build a position with scale over time. And over time can be days, weeks, or months. And I think anytime you have a hot stock, buying a small amount now, buying more later, and then adding on significant weakness if and when it comes, that's always a recipe for success, because price matters and price will always matter. If you want to learn more, you absolutely can. Connect with us online at getretired@stayretired.com.